And now for something completely different.
Forget everything you've been told by others before. Get IA Advisors.
And we're here. Welcome, everybody, to Financial Fitness Friday. I'm Rich Rosso, CFP, Danny Ratliff, CFP. We're so happy you're joining us. Oh, I'm longing for the days of Gerald Ford. Longing for my whip inflation now buttons. I did get some vintage win buttons, by the way. Gave one to Mr. Clanton. Mr. Roberts probably threw it in the trash going, what the hell is this? But that was a grassroots movement to combat inflation, which I think is better than the current president is doing right now. I think if we all got buttons, it would be probably better. This was to encourage, Danny, because you weren't even, I don't even think Danny's grandparents were born yet. Personal savings and disciplined spending habits was how we were going to whip inflation now. So if you just wore that little button, I was little and I wore the little button. I wore the button. I had no idea what I was wearing, but it was like, I win! I win! Yep, inflation was public enemy number one. October 8th, 1974.
Well, thinking about inflation, all the things that we're doing to curtail that, we created this problem, and now we're trying to figure out a way out of this, to unwind all these issues. And we knew that, look, quantitative easing, lower interest rates for much longer periods of time than we probably needed. The economy was sustainable at one point, and now it's only sustainable with this.
I think the Fed gets an unfair kind of and I'm not a big fan of, obviously, Mr. Artie Johnson on his little tricycle with his water pistol, Powell. But obviously, Danny, it's all this fiscal spending and all this fiscal stimulus that was absolutely not needed. Or at least if it were needed, it should have been done in a much more direct approach, or at least more surgical approach, right? Not this shotgun, send money to everybody. And then obviously that was in combination of people who were saving money. They built up their cash coffers. Look at what the personal savings rate was during the pandemic, right? Too bad it didn't stay there. So people had all this cash in their checking accounts, pent up demand for sitting in their houses all this time, and then fiscal stimulus. I think it was the second fiscal stimulus that was not required that really, in the face of supply chain, created this perfect storm.
Well,
right?
you have counteracting arguments here in the sense that you can't have this fiscal policy completely different from monetary policy as well. So I get your point in the sense that it makes it very difficult for the government and congressmen and women to get things done. If you're going to say, on one hand, they're going to say, oh, everything's okay, economy's strong, we're going to start raising interest rates, we're going to do some quantitative tightening, we're going to unwind some of this. And then on the other end, they're handing out free money because they say that everybody needs it.
Well, in some ways, it should work like where it is. If fiscal is the stimulus of the day, then you need to pull back on the monetary stimulus because the fiscal stimulus in the face of less supply and great demand is going to create inflation. I don't think what everybody thought about, except we talked about it, was how long was this going to last? How long was this inflation dilemma going to be? And obviously, it's longer than anybody else has anticipated. And what's going on in Russia and Ukraine, when you look at foodstuffs and wheat, fertilizer, I mean, that whole situation there, even say the war is over, hopefully soon, but we're going to have issues with
long-lasting impacts.
Long-lasting impacts to inflation. Now, to Lance's point, which I do agree with, we're going to see a slowdown in economic activity. We've already seen it. We're going to continue to see it. Inflation will ebb. The problem is your plateau is a lot higher. So when I hear Powell talk about this 2% benchmark, they're going down with that ship, Danny. They are going down with that ship, that inflation.
So now we'd like to get back to the 2%.
Yeah,
right?
they keep
We could never
bringing
get
it up.
there.
No. So why don't you set the bar higher? We're already ready for it.
Yeah. Well,
What's your new benchmark rate for inflation? Because it can't be 2%. And that messes up a lot of financial plans, okay? Because what happens is financial planning software goes by what the Fed's mandate is, I think. Okay? Get everybody on the road to higher benchmark rate. Maybe it's 3. I don't know. I don't know what it is yet, and we may have to change inflation in our plans next year again, even though we did it a year and a half ago. So we're going to have to wait and see how we come out of this.
The issue here is that historically, when we talk about we want at least 2% inflation, we're looking for 2% GDP. We're looking for growth. We're looking for all of these other metrics to measure up to it as well. Now, if we talk about 2%, we may have that. We may not. But especially if we say, that's why I think they're not setting the bar any higher, because they do see that there's a slowdown on the horizon. If we're not already seeing one now, that maybe it's not the 3 or 4 that we've historically wanted and needed. That those numbers have changed. I think that those are just they're so far in the rearview mirror that I'm not even sure they know where or how to get there.
I don't either. I think it's like when you go for your blood test and your numbers are awry, and then the doctor goes, well, do a little of this, and then let's check it again. And meanwhile, when you look at how most of America is suffering due to inflation, it's a problem. Might kill the patient before...
Well, and it's really easy to be a Monday morning quarterback here.
I
mean, I don't envy their position one bit. However, actions have consequences, and we've seen that these things have gone on for far too long, and now we're having to pay the piper.
It's funny, the Fed research that comes out of their banks, like the Atlanta Fed, New York Fed, makes a heck of a lot more sense than the head of the Fed. They talk about this stuff like they know what's going on, and I read their white papers, and I go, yeah, but where is the disconnect between a bank creating great information and the Fed actually using it? It puzzles me. It puzzles me because they are producing data that talks about a lot of what we're talking about, and I will use as a resource. Yet at the same time, when Powell talks and his group there, it's like they're not. They go through this political prism and they don't look at their own data.
Yeah.
And that I guess that part of it really puzzles me more than anything else.
Well, I don't think it should puzzle you. I mean, you hit the nail on the head. It's a political prism. It's not exactly what the data suggests. It's what the politicians want. And who, we saw this back with Trump when he got after Powell for trying to raise rates in 2018.
Right.
We're going to see that once again, especially with midterms coming up. I mean, I think there's so many political ties here, especially to the economy. And each president here, it seems recently, has been judging themselves on just that, the market.
Well, and here's the funny part. And we'll talk about this, and it's not really funny, but the current administration always talks about how the stock market's not important, yet the Secure Act that they're going to look to pass is all about getting more people in the stock market. And the stock market is going to be more important to everybody based on these new changes that are coming, possibly coming, which we'll get into in later shows and in writings. We get back, just talk about where the market is today, seeing a bit of a rebound based on the sell-off yesterday. You're listening to Financial Fitness Friday here on The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
There's a war being waged on your retirement dollars, and unless you act now, you'll lose the battle with inflation, higher taxes, and a lower standard of living. You can blunt the effects of rising prices with our next workshop on combating inflation in retirement. April 2nd at the Embassy Suites Houston. Richard Rosso and Danny Ratliff will help you fortify your life savings, make the most of Social Security, and lower your taxes. Register now for this free workshop at realinvestmentadvice.com. Combating inflation in retirement with Ratliff and Rosso. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar.
I'm a right in the country song called Yields Are Inverting All Over the Place and I Ain't Having No Fun. What do you think, Brett?
Might go. You need to get back in the studio for the creative lab here, buddy.
I tell you, every time yield curves invert, there's the camp of, it doesn't mean anything. And the camp is, of the other camp, yeah, okay. I've got two kids. One's a student. What do they used to call it? Not Beavis and Butthead, but they used to have a magazine called Highlights.
Oh, yeah.
And it was like Doofus and, like, there were two brothers, and one was always doing the right thing, and the other brother was always like a mess. Goofus and Gallant, or whatever it was.
Doofus and Gallant.
Was it?
Yes.
Something like that,
Yes.
where, you know, it's like,
No, it's Goofus.
Is it?
Goofus and Gallant in
Okay.
Highlights, yeah.
Don't ask me. I'm digging up this stuff in my head today. So, the Goofus guy, or the kid that you can't control, that's the stock market. The Gallant little boy is the bond market. Listen to the bond market. Investors tend to be smarter in the bond market. So Lance wrote a really great piece about yield curves because by the time you'll be in a recession, you won't even know it. You won't know it for another 6 to 12 months, whether you are in one or not. And the yield curve itself is not indicative. It's when it uninverts. That's a very big word for morning with no coffee. That's when the you-know-what hits the fan. So it's too early to say, but you do have to pay attention to the bond market, Danny, don't you?
Yeah, absolutely. Bond market's historically the smart money, and so we will typically use this as a pretty good indicator. And just because, you know, we're seeing these inversions, and like right now, I just looked up, and, you know, 5 and 30 is inverted again ahead of jobs data.
Right.
The 2 and 10 inverted yesterday. And these are small, quick inversions where they go right back. That's not necessarily what you're referencing. And usually we'll see it sit for a little bit longer before we see this larger turn or trend in the overall economic data. But we're seeing this. We're already seeing, you know, new home applications are beginning to decline. We're seeing that mortgage refis, obviously that's a significant decline because with rates higher, it just doesn't make economic sense any longer.
You're going to breach 5%. That's a psychological nightmare, I think, for home buyers with prices.
Which is so funny because you think 15, 20 years ago, 5% would have been fantastic. But we've been so used to these ultra low interest rates, and we've been able to use them to our advantage as well. With, you know, not just in homes or even refis, things like that, but all over from an economic standpoint with lending. So,
help maintain a standard of living.
Correct.
Because people live off payments,
and that's
low
going to
interest
change
rates.
if those rates go up.
Right, and they can only go so far. But the point is, the bond market is trying to figure out the grind of how slow we're going to get, because first quarter GDP, when you look at spending and the direction of it, where it's going, you're going to have a first quarter number that is probably less than 1% for the first quarter. And I think the bond market's trying to assess how slow is slow. And that is going to be something that you must pay attention to. So when I always see pundits sort of poo-poo the bond market, I know it's for sort of headline fodder, and it's not really, there's no real data behind it. And there's always these pundits that are saying, it doesn't matter this time, it's different. Well, you can all think that if you want, but we'll still pay attention to it.
Well, I think it does provide a lot of information as far as what's actually occurring in the economy. Now, the other aspect, you're seeing a lot of guys out there who are saying they're not even going to invest in bonds because, number one, they're boring. Number two, they think rates are going to the moon. And so it's interesting. And a lot of these times, a lot of these managers, portfolio managers, don't worry about what type of economic activity is actually occurring.
No.
Where we're going, what the trend looks like. They're saying, hey, we're all or nothing. And sometimes these are people that can control it, right? We have conversations that, look, if you're going to invest in a specific area, a mutual fund, an ETF, these guys, they have to stay the course because they have a very specific mandate or investment policy that's going to dictate how they invest. If they're going to invest in tech, they have to invest in tech. Doesn't matter if it's going down or it's not the place to be. They will remain invested there.
Absolutely.
Same thing for energy or whatever sector or area they may focus on.
Yeah, that's their mandate, right? Their mandate is we stay fully invested.
Correct.
We don't care about the macro. We look at the mic. We look at things from the bottom up, and we don't care. It's up to your advisor to make those decisions as to, many times, the product. Here's a product. How does it fit into Danny Ratliff's life? How does it fit into your portfolio? I think a lot of advisors look at past performance. They get seduced by it just like anything else. They don't look inside the portfolio. They are racked with recency bias, overconfidence. Listen, advisors are people.
Well,
they have emotional biases. As a matter of fact, they're magnified because as advisors, we think we know more. We're not humble enough. So,
I don't know if it's always that either, though. I think sometimes it's an easy sell for some of these guys.
Yeah.
Nobody really wants to go there, right? But this is something that needs to be discussed and
Danny
people
just
need to
went
be
there.
aware of. Yeah, I did. But, I remember when I started in the industry, you remember AIM Investments?
Yes.
So,
yes.
get my securities license. I'm on this big team. I get handed basically a magazine. Said, hey, call these people and sell them some of this stuff. What do you sell? I don't know. Just go through the returns and look for one that looks really good. I'm like, wait a second. This doesn't sound right. I even knew as a neophyte in the industry, just coming in, that this was not right. And you look back and at that time, this was a tech bubble. You were seeing returns like 90-something%.
Yep.
Through the roof. Things that you just don't see this day and age. Or if you do, it really, it's pretty eye-opening to say, whoa, hold on.
Well, that
now.
was, say, Kathy Wood's in the ARK investments.
Correct.
Right? And there's nothing wrong. Kathy Wood's, she has a philosophy. It's up to your advisor to make sure that they're understanding how that investment works and possibly fits or does not fit within your portfolio. If I own every ARK ETF, I'm not diversified. I'm taking the same level of high-octane risk, and that works in momentum markets. But markets change, and I don't know if we as advisors understand market cycle, styles change. And for no fairness, the Fed has promoted this growth momentum kind of situation, lack of fundamentals, who cares, Reddit traders and market mavens for a while. I don't know, Danny, maybe we're moving away from that. But you know what? I still think it's too early to say if you're moving away from that. You've got to be humble enough and aware enough to say, hey, maybe I'm wrong and I need to change my mind. One of the most important things for an advisor to have is an open mind, all sides of the argument, be open to change. And I just find a lot of advisors are set in their ways. And this is the way I've done it. That's how I'm going to do it.
Well, that's
and
interesting.
I
had a conversation with a gentleman yesterday.
Yeah.
He said, hey, I think we think very similarly here. And, but what if we're wrong? I said, well, if we're wrong, number one, it's not going to be all of your portfolio. We're not all or nothing one way or the other. And number two, if we're wrong, we're going to own up to it. And, you're going to be wrong in these markets, especially if you're going to invest in different areas. Not everything's going to, go up in unison. There's going to be times that you're going to have things that are down. I wish we could only pick everything that went up, right? But
well, listen, in all fairness, like even to Lance, I don't want to make his head any bigger than it is.
No, don't do it. Don't go there.
But he has been spot on our meetings about stocks are overdone, bonds aren't. Like yesterday was a microcosm of Lance being correct, right?
Yeah.
The toughest part is to trade that and know when that shifts because it happens so quickly. So you've got to hedge your bets properly to sort of play both sides of the fence and maybe tilt one over the other because it's impossible sometimes to capture the trend overall. But he's been very correct on the sentiment, even if it's down to the day. I've noticed that. And he says it. Listen, if we're wrong, we're open enough to make a change. If we're right,
we'll move out. We'll come back to it if necessary.
Right. And if we're right, we're going to add slowly more to that area that we are correct. That's the best your money manager is going to do.
Correct. And or take profits along the way.
Well, not only take profits, but if you are wrong, we're going to minimize those losses.
Correct.
We're going to also look at things from a fundamental perspective. So I know of so many investments we've made that didn't work, Danny, up front. But guess what? Lance would say, you know what? And the team, Mike and Nick and all of us together were going, listen, there's no reason why this got beat up so much as it is. We're actually going to add more to this position because this is short-term noise as opposed to this investment fundamentally, technically is broken. Last year, we took quite a bit of profits in tech. And I'll tell you, that does feel painful, right? When you see something that's working and you take profits. But how smart is that? And I would be telling clients and even friends of mine, I would say, listen, from a perspective of strength and calm, you are going to take profits from something as opposed to now it's starting to head down and you're going to panic out of it. Why don't you do it from a position of strength where you're pulling money out of that area? And it's never an all or none game, right? You just underweight it, take profits in the areas that are overheated, add money to the areas that are getting beat up. Remember when energy was coming up on the fundamental screens, all those energy stocks were coming up? They were popping all over the place fundamentally. And then we watched them for a technical entry. That's risk management overall. Hey, when we get back, I want to talk to you a little bit about some revolutionary change that's happening in retirement that I think you'd be interested in here. Financial Fitness Friday. We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
There's a war being waged on your retirement dollar, and unless you act now, you'll lose the battle with inflation, higher taxes, and a lower standard of living. You can blunt the effects of rising prices with our next workshop on combating inflation in retirement. April 2nd at the Embassy Suites Houston. Richard Rosso and Danny Ratliff will help you fortify your life savings, make the most of Social Security, and lower your taxes. Register now for this free workshop at realinvestmentadvice.com. Combating inflation in retirement with Ratliff and Rosso. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
An energy rebate equating to $100 a month for individuals. Now, my daughter would love this. She was just complaining about filling up her car.
Was she complaining about that while she's standing in line waiting on a $6 cup of coffee?
No.
The Real Investment Show podcast.
The gym that she goes to, it is literally, ladies and gentlemen, 300 yards down the street to the gym. She drives. So I'm letting her learn her lesson about being frugal.
At realinvestmentadvice.com.
Learn to use your feet, Flintstone.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
You can blunt the effects of rising prices.
Well, happy April Fool's Day, everybody. April Fool's Day is canceled this year because no made-up prank could match the unbelievable poopy going on in the world right now. It's the world of the Babylon Bee. We just exist in it. The Babylon Bee is no longer a satire site.
It's bad when you don't understand if the Babylon Bee or like the Onion is real or not anymore. You're like, wait a second, where am I? What are we doing?
It's the world we live in.
Welcome to Bizarro World.
So no April Fool's Day. Every day is Fool's Day around here. Listen, lots of big numbers coming out this morning. We've got average hourly earnings month over month from March. I think we're going to really start to see a grind down in some of these numbers. Labor force participation, S&P Global Manufacturing PMI. It's going to be really ISM manufacturing, prices paid, new orders, and new orders. We're going to see whether or not we're correct about where we are from a grind down perspective for economic numbers and the toll of inflation. It's going to be interesting to see how much wind is out of the economic sails for first quarter. So listen, we got a lunch and learn coming up. Medicare, avoiding the pitfalls and permanent penalties. Thursday, April 21st, 12 o'clock. This is really all the acts that are getting passed. We can't seem to get Medicare enrollment all on the same page. It's got to be multiple pages, multiple enrollments, right? So we want to make sure when you should sign up for Medicare. The alphabet soup of Medicare. What is A, B, D, C, All right? How the significant passage of time can adversely affect your Medicare premiums.
Well, and this is so usually we have lunch and learns and webinars. So lunch and learns are typically in office.
Yeah.
This will be actually a webinar. So wherever
Yes,
you are,
webinar.
if we're separated by distance, you can get on and it won't be an issue. So
Post pictures of your lunch.
go to realinvestmentadvice.com, go sign up. But we are having one of our first for the year, in-person events tomorrow. Still a couple spots left, I believe. Realinvestmentadvice.com.
If
Check
you
us
want
out.
to sit on other people.
I-10, Beltway 8. We'd love to have you. This is going to be our more comprehensive battling inflation in retirement and even pre-retirement. What do you do? How do you do it? But we're going to talk about all those big ticket items that people are concerned with, especially if you're near retirement. Obviously battling inflation. What do we do with that? How do we do it? How do we look at that from a planning perspective? Also, two, looking at Social Security, Medicare. How do you keep money in your pocket? We're going to talk about so many things. And it's really interactive class. So we're going to talk about a lot of that information that, we get back from you guys, either through our YouTube channel, The Real Investment Show, people writing in, our clients, whoever it may be. We get a lot of information from you guys. So we know what most people are kind of struggling with.
Yeah, unless you don't believe taxes are going up.
Nah, never.
And if you're retired and you believe you're going to fall into the lowest tax bracket, that's another joke. April Fools. You want to know how to combat taxes in retirement as well. So all the things that are going to battle your retirement, we're going to give you the plan to fight back. The Zelensky of retirement planning, Danny Ratliff.
Couldn't help yourself, could you?
I couldn't. I really couldn't. And I think tomorrow we're not going to let you die of thirst. I think we'll have coffee tomorrow. Yeah. Coffee and some, I think what Danny did, he called the hotel and he goes, listen, we really would like donuts from last month. Because we're trying to save money. So the donuts are going to be a little hard.
I may have somebody camping out at Shipley's this afternoon.
It's worth the price of admission.
Before they go out to the back and throw the donuts in the dumpster, Erica's going to be there going, don't do that! Give me those! So that'll be fun. No, but it'll be, listen, this is our first in-person event. And this is a class. And you're going to learn a lot. So be there. Embassy Suites. Very easy to get to. Right, Danny? What do you always say? You always got to tell the location because you're good at the location.
Well, basically, we're I-10, Beltway 8. Pretty easy to get to from just about anywhere in town. So
I don't say
pretty
the
centrally
location,
located. Right. Yeah.
Because I'd make it sound inconvenient.
You're going to give it like the specific address, the details. Just go look it up. Go to realinvestmentadvice.com. We're close to everything.
Listen, you want to combat inflation,
yeah.
Look it up. Now, tomorrow, make sure you got your teeth in for the donuts because they're going to be tough.
And talking about Medicare here.
Yeah. And Medicare does not cover dental, so we don't want to make sure. You want to make sure
don't
your
give it
teeth
all
are
away. Come on.
Okay. All right. Well, speaking of retirement, I think over the next 10 to 20 years, Danny, there are going to be some huge changes on how people live in retirement. And we're going to be talking about how people age in place and how they live in retirement. But there's this plan called Opus Newton. No, it's not a new cookie. It's a new type of senior living development for people 62 plus. Now, it's catering to this underserved middle income market. So when I wrote my book in 2012, I said, there's going to have to be a change in how older Americans live in retirement. It's going to have to be more communal, maybe tinier homes. You're going to have a lot more singles in retirement. Well, this not-for-profit community center is at the campus of the Jewish Community Center in Greater Boston in Newton, Massachusetts. And it's really about trying to make senior living affordable for middle Americans, right? When you look at, and they talk about Genworth in this article here. This is called 65 plus. Cost of care in assisted living is now $51,600 a year, $105,800 for a private room in a nursing home. Listen, it's not cheap, right? And people live longer today. That doesn't mean that they're healthier, especially when you look at dementia. Brain. Hey, did you read that about Bruce Willis?
Yeah, what a shame.
Dang. And then I read about all his stuff on his, how he wasn't handling his lines in movies, and he had to have whatever called was the earbug to give him the lines. Yeah. And then at one time he said, hey, he didn't even know what he was doing on set. He goes, what am I doing here? So I just wonder if he had a stroke. But listen, you look at Bruce Willis, he's 67 years old. He's pretty healthy. Physically he looks good. And this family came out with a commentary that he's healthy, but mentally he's not doing very well. Now, obviously, Bruce Willis has the money to take care of himself. Well, what I'm saying to you is there are a lot of people in the same predicament who don't. So there are going to have to be ways to perhaps people to live affordable in retirement. So by 2029, this is out of the University of Chicago study, estimated that the number of middle-income people 75 plus will nearly double to 14.4 million. 54% of them will be unable to afford private pay senior living. 60% of them will have some mobility limitations. 20% will have high health care and functional needs. So this Opus Newton is a small community where people live together. They have to volunteer to do certain things for the community, even taking care of other residents, Danny. So it's a really good way for people to share the costs and make these programs available. Again, and even this is not really cheap when you look at how much they're asking, but it's 1 and 2 bedroom apartments. Let's see, more than 1,000 people. Preliminary prices for the community share, even though this is supposed to be for middle American purposes, $302,000 to $732,000. So even the affordable is not it's not really affordable.
Yeah, what is affordable anyways these days?
My gosh, I don't know. All I know is when you look at, and we use Genworth a lot in our studies, in our writings, even for custodial care at home, for Houston, it's close to $40,000 a year. So if you don't have some way to mitigate that long-term care risk, especially if you're a senior who's alone, that is going to be a problem. That's why I think some form of smaller communal living is in the cards.
It is, and it's going to have to be for many people because, unfortunately, we know the data, we know the numbers, and it doesn't look promising for many. Now, granted, like Lance always says, it's probably not most of you guys out there right now listening to the show. Most of you guys have really good habits. You've been diligent about saving, putting funds aside. But if it's not you, I guarantee you it's somebody that you know.
Absolutely. Or you've seen a family member going through this issue that doesn't have the money, and you're one of the caregivers, or you're providing financial assistance. And you know what
generally happens, though, is that people usually, by the time you're probably in your 60s, you're dealing with somebody who's actually dealing with this and going through it. And at that point, the cost of care or to attain the insurance for it is all that more expensive. And so, what we really want to encourage people to do is think about this ahead of time. Start to do this, look at this within your financial plan. This can be the elephant in the room. The numbers out there are astounding as far as how much this costs in retirement and what this actually is going to mean for your pocketbook, not just for you, but your spouse or your family. A lot of people, the number one thing people say is, what are you going to do? My kids. Your kids don't want that. Don't put that burden on them.
No.
And start to plan for this ahead of time. We're going to actually talk about this tomorrow at our event. So combating inflation and retirement. Go to realinvestmentadvice.com. We would love to have you guys there. Like I mentioned, a couple spots left.
Yeah.
Realinvestmentadvice.com. Please go sign up. Love to see you all in person. We'll be right back after this quick break. You're listening to The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
There's a war being waged on your retirement dollar, and unless you act now, you'll lose the battle with inflation, higher taxes, and a lower standard of living. You can blunt the effects of rising prices with our next workshop on combating inflation in retirement. April 2nd at the Embassy Suites, Houston. Richard Rosso and Danny Ratliff will help you fortify your life savings, make the most of Social Security, and lower your taxes. Register now for this free workshop at realinvestmentadvice.com. Combating inflation in retirement with Ratliff and Rosso. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-17.
I've got a really good idea.
What's that, Richard?
A communal, older American community for single men called Bitter Ends, because we all get dang crabby as we get older.
Bitter Ends.
You like it?
I like it. Yeah, okay.
No doors
got
on
panache.
any of the rooms. No doors.
No.
Everybody's able to walk out into the right. Walk
Yeah.
out into the hall and go, "I hate you. I hate you too. What time's breakfast? I don't know." So, Bitter Ends.
Why does it sound like Grandpa Rosso? Kind of sounds like Grandpa from The Simpsons a little bit.
It does.
Isn't that the same thing? Yeah, probably. That's how I envision him. That's actually what Richard's
I had
gonna
to
be.
stop my grandfather from every summer in Brooklyn sitting in the backyard with a huge pitcher of Chianti with peaches in it. And his pastime was throwing rocks at stray cats. And I said,
Okay.
this is what retirement is like. Getting drunk and throwing rocks at stray cats.
Oh, man.
I'm like, I don't want to live to be this age.
How do you get
it was
that,
like 70.
How do you get that rock trio in the backyard in the first place?
It's Brooklyn. Every backyard is rocks. You know what I mean?
Mm-hmm.
It is what it is. Listen, we talk about having a hobby, having something to do in retirement. It's especially important for men. We always talk to clients and say, listen, what are you going to do for a living in retirement? What is going to hold your interests? Because throwing rocks and cats. Now, the Chianti with the peaches, I'm all for that. But the rock thing,
Sounds like a good time. What time does it start?
10 a.m.
Oh, okay.
Every day.
Every day. In the lawn chair. Every day. Where's Grandpa? You know, in the backyard with the rocks.
You had to ask.
Yeah. Then it's 10:30 and I'd hear him, what time's lunch? I'm like, retirement's hell. It's just a mini hell that you get put into. This is not the same anymore, right? People live vibrant lives in retirement. They continue to work longer. You know, right, Danny? We meet with clients that are 70, 80 years old, people that are older, and you wouldn't even know it. They're very active, they're engaged, they're social, And it's nice to see, but you need the money. And one of the ways you keep the money is by making correct decisions, which Social Security, right?
Correct. Social Security goes...
I'm waiting for Lance to cue in on YouTube.
Oh, he is.
It wasn't going to be there anymore. He's throwing rocks at the Social Security Administration.
I actually did get him to admit this week that it will be there in some way, shape, or fashion. Which is,
did you give him the
steps.
people will be living in his backyard because he doesn't want to think about that.
Well, he's also out digging a moat right now to make it bigger. He's probably purchasing a couple more alligators.
Listen, Social Security is not a cure-all by any means. But even with people who have done a wonderful job saving, if you go through a poor sequence of returns or lower returns in markets for a series of years and you're in withdrawal mode, having Social Security to fill in those holes where maybe one, you don't have to take the money out that year of your variable asset accounts like stocks and bonds, or you're reducing your withdrawal rate. Because it is, if you take the words, just take Social Security out, it is designed to be an income you can't outlive. People who have, or retirees who have what, Danny? They did the right thing with Social Security and they have a pension. Man, people look at it and go, okay, I'm bringing in X amount of dollars in from pension and Social Security. And that will cover my needs. That'll cover everything I need to do to keep shelter and food on my table. What a good feeling that is. And when we lost pensions, unfortunately, Social Security became the pension. It wasn't designed to be that. So there are times when always the Social Security claiming decision is really a big part of retirement income planning. And you don't go to your friends, and you don't go to your neighbors, and you don't use any kind of political kind of prism to think about Social Security.
Or you don't look at the ad that's going to pop up consistently saying that it's not going to be there to scare you into doing something that you may or may not need. Now, it doesn't mean these products are bad, but when they're sold, not planned for, they most certainly are. Because this is where people get in trouble.
When the trust fund stuff comes out and it's underfunded or whatever it is, you get all these bombastic headlines. It's going away and so forth. And then you look at it's from Wells Fargo, JP Morgan. Why? Because they want to put you in stocks. All right? They want you in the stock market. And I will tell you, that works great when you're in a market tailwind. But what if you retire in a market headwind and returns are going to be lower?
Well, it's also
if
the
I'm
annuity
getting 3%
or the gold.
a year on average on a blended portfolio and I'm taking out 4%, I don't need to be a rocket scientist to know I'm in trouble.
But hold on. So that's okay, too, though. There are going to be times that you're going to take out more than what you make, right?
But not every year, maybe. But if I have a poor sequence of returns for 4, 5, 6 years, look what happened to people who retired in 2000, Dave.
Oh, yeah.
Right?
You completely eroded it. You never got back to even.
Right.
But for some people, maybe getting back to even was never the goal. Maybe it's just you have X amount to live on. You're not going to leave a big legacy, and that's going to be okay.
Yes.
And you're going to have enough to go down this path. Because I think so many times, and for most people we visit with, the goal is to not erode the principle that you have. Mm-hmm. It's to live off the interest or the growth from it and let it continue to grow over time. And so, but I think a lot of times we get so focused on that we forget that, yes, we're going to have bad years from time to time.
Absolutely.
And two, for some people, and probably the majority of people that are out there, they're actually going to erode whatever they have. And granted, we looked at numbers. A lot of new numbers came out from Transamerica Studies for Center for Retirement. Mm-hmm. You mentioned Genworth a bit ago. These guys do a ton of research, ton of studies, and it shows that most Americans don't have enough. They will erode what they have.
Well, they're on a spend down.
Correct.
But you just want to make sure that
your
money doesn't spend down before you go down.
Correct.
Right? And that's the issue. So if I have a big correction and I'm taking out my normal distribution, as Lance has charts, we have a chart tomorrow, you could be setting yourself back a decade. Because volatility is not your friend. So what Social Security and guaranteed income products do is it fills that hole. like during the financial crisis, Danny, right? A lot of clients who had variable asset portfolios and like, oh my gosh. I said, listen, there's got to be a way we don't have to take distributions this year. How do we do it? Well, one, we took Social Security the right way. We're good. Two, I have a home equity line of credit, or I have cash value in life insurance. I'm going to use that this year. I said, listen, here's what we're going to do. We're going to do this for a couple of years. Once the market rebounds, and markets always do, we just don't know when, we'll pay off the loan. We'll take care of it. And that's what we did. Because there are times where you can't, or you need to review your portfolio withdrawal rate. What Social Security does, if you take it right, is it allows you to have some breathing room. If I've got a good cash flow coming in on a monthly basis that I can't outlive, maybe I could look at my variable assets. Listen, Danny, you said it right. You're saying it from a very intellectual perspective. But if I'm a new retiree and my account's flat for the year, right? I didn't lose any money, but the markets are down. I'm sort of flat, but I took 4% out. My first year, I think I'm going to panic.
Oh, yeah.
My
it doesn't
first
feel
year,
good
because
at all.
I'm seeing this erosion, and I'm psychologically not dealing with this very well, right?
Well, not to mention, you just switched from being an accumulator to a
Right,
distributor.
right.
That's hard enough. I mean, so many people struggle with that. In fact, so much so that we see a lot of people go back to work to some extent, do contract work, part-time work, because they have a very hard time just mentally overcoming that hurdle.
Yeah, it is. I call it going from Tim Allen, Tim the Toolman Taylor, to Wilson. Right? I'm on the other side of the fence. I have to think differently than a family in that show that has 3 young children and is an earnings machine on his new show. Wilson, in his little fisherman's hat, right? He's got to look at his portfolio, his money differently than Tim the Toolman. I'm not wearing that hat in retirement. Even if I am throwing rocks at cats, I am not.
But you are going to wear it tomorrow.
Oh, I
Yes.
wish I had a hat like that for tomorrow.
Well, you've got time to go
find you
get
one.
one. Yeah.
Yeah.
Do they have like a
Academy opens at like 9.
I'm not even sure they sell those at
I
Academy
don't think
anymore.
they do anymore. Those fishermen.
Fisherman
I'm going to have
cats.
to call somebody in New England.
Nah, I'm going to find you one.
Go to Dick's Sporting Goods.
Oh, I guess I could do that.
Yeah.
That's where my day will be today, trying to find a hat. That's where we need some RIA advisor fishing hats. What do you think?
Yeah, good luck with that one.
And I know exactly, I would use a caricature of Lance, and I know exactly which picture I'd use. It's under the wash, rinse, repeat video.
That'd be a capper.
That would be. It really would be. So listen, we've got the Lunch and Learn tomorrow if you want to come out and see us. We've got a great class tomorrow. Lots of stuff for you next week on the show. Hope you have a great weekend. Thanks for being with us here. Financial Fitness Friday. It's been fun. Hasn't it, Danny?
Always.
Thanks, everybody.
Money.